Hey, in this video, we're back with another chart reading session. If you're a stock or option trader, you know how important it is to understand which way a stock or index is moving before you actually get into a trade. That's how we do it at the Smart Option Seller. It's all about chart reading. We try to see where the stock is going and or may not be going. That helps us figure out our timing pattern when it's time to get into or out of a trade. So if you want to learn a little bit about chart reading, technical analysis, what we're doing, what we're seeing, what we're thinking, stick around and watch this video. So let's go. All right, everyone, Lee Lowell here from smartoptionseller.com. Here making these free videos, helping out the community, showing you my charts, showing you what I'm seeing and how it helps us make trades for us. We sell put options, we sell put option credit spreads. So we're looking for more neutral to bullishly oriented patterns for stocks that help us get into our trade. So let's just take a quick look, go over some charts, look at some stocks, look at some indexes, and we'll just go from there. So we always look at the S&P 500 first, represented by the SPY, which is the exchange traded fund for the S&P 500. We like to look back and see where the market's been going, where it may be heading. And we use patterns and technical indicators to give us an idea of which way a stock is trending. That's the most important thing, is figuring out which way a stock is trending, because most of the time a stock in a certain direction will stay in that direction until it gets pushed in another direction. That basically means we follow the trend. So here's what you're seeing in front of you. This is my charts that I use. I look at daily bar charts. They're not candlestick charts. I have 3 moving averages on my charts. I got a 20-day, 50-day, 200-day moving averages, all simple. And down here is the 14-day RSI. It's an overbought, oversold indicator. Just gives us an idea of when a stock and or index may be getting a little oversold or a little overbought. Helps us with our timing a little bit. So let's talk about the S&P 500, where it's been and what may be coming down the road. For those of you that follow the market, you know that this week, this Wednesday, was a Fed meeting in the U.S. and they determined the interest rates. So the Fed decided that they were going to leave interest rates alone, but apparently they think that inflation's still a little bit trouble here in the U.S., so there's a possibility that they may raise interest rates again down the road. The stock market does not like rising interest rates, so typically we'll have sell-offs when that happens. Why does the market not like rising interest rates? Because it allows people to pull money out of the stock market and put it into fixed income securities like T-bills and CDs and money market funds that are paying a pretty good rate right now, about 5.5% on your money for cash. That's incredible. We haven't seen interest rates like that since 2006, 2007. So if you got cash sitting in the bank, or I should say an online bank, you know, one of these banks that pay better interest, you're getting 5 to 5.5% on your money. That's not bad. So that's why the market doesn't like rising interest rates, because people will take out money from the stock market, which tends to drop stocks. So that's where we're at. And you can see for the stock market right here, the S&P 500, or the market in general, it started its upturn in October of 2022. Back here, you can see all of 22, we had this downtrend. And then October of 22, it started to have the uptrend. So we draw these what we call channels. Okay, these are hand drawn. You connect some tops, you connect some bottoms, and you can see what kind of visually, which way a stock or market is trending. Obviously, the stock market, the S&P 500 has been in an uptrend since October. So you can see how the market bounces up and, you know, at the tops and the bottoms of the channel. And right here, this past week, we had a pretty big down week, and the S&P 500 is getting close to coming along this bottom edge of the channel. And right here, this is the 200-day moving average down here, which is a pretty good support line. So for next week, what we may be looking for is for the S&P 500, maybe follow through a little bit more on the selling to come in contact with the bottom edge of this channel. And if it holds, it will start to bounce and move, you know, go back up and continue on with its pattern of rising and falling, rising and falling. So for us, you know, we're bullish. We like to be bullish in the market. We would hope that we're going to see a little bounce next week. If it drops through the bottom edge of the channel, then you got the next line of support, which is the 200-day moving average. You can see down here in the RSI indicator, it's getting sort of low, not completely oversold. I use the 20 level and the 80 level to determine my overbought and oversold levels. The default for the RSI is the 75 level and the 25 level. You can adjust those if you want. I use the 80 and 20 areas. So we can see the market's coming back, getting close to the bottom edge of the channel, and you got the 200-day moving hanging out just below. So we're sort of in a wait and see mode here. In our newsletters where we sell put options and we sell put option credit spreads, 2 different newsletters, we've been a little quieter because we can see that the market's been heading lower. When the market's telling us that it's heading lower, there's really no point for us to step in here and put our money on the line when it's still moving lower, because that would be detrimental to our put selling activities. So for right now, we're kind of sitting on our hands. We got our money sitting in cash and earning 5 to 5.5%, which is great. So we'll take that while we sit and wait. So for the meantime, the S&P 500 coming on a downtrend here. We're waiting to see what's going to happen next week when it comes in contact, if it comes in contact with the lower edge here. Let's take a look at the NASDAQ. We use the triple Qs to see how that's moving. Pretty much the same thing basically since towards the end of last year in the uptrend. And we can see the channel right here, the triple Qs, the NASDAQ has fallen below, for right now, the bottom edge of this channel. Okay, so there's some selling in the NASDAQ. You got the 200-day moving average down here as well, and the RSI moving down. Has not gotten completely oversold. So I really would not want to see the triple Qs come all the way down to the 20-day moving average. That would be a pretty good sizable drop right there. Is there any other support before it could come in contact with the 200-day moving average? You need to look back at the chart, see if there's any other support areas. The only other support area we can see right now is this little bit of support, maybe right around here. We can draw a line. We can use that as our next potential area, which would be, this is roughly, let me see what the numbers are, move myself here. Around this area would be roughly 355-ish, 354. So, there's a possibility the NASDAQ could follow through early next week. See if it'll hold some support here, because we got this spot right here, which bounced off the 354 level, and this little area of congestion right around 354. So that would be your next stop or potential support area. If it drops through there, then it's probably going to try to head down to the 200-day moving average. So for right now, things are looking a little bearish for the market, and typically September notoriously is bearish seasonally for the stock market. Happens almost every year. September is just a bearish month. So maybe we can get out of September with not too much more damage, and then October, November, December, very bullish months of the year. So we're hoping we can find some support, get through September, and then the last quarter of the year, we start to head higher. Let's look at the Dow Jones represented by the diamonds. This is the DIA, which is the exchange traded fund for the Dow Jones Industrial. You can see the resistance here for a very long time with this blue line here. And you can see that, we draw these channels. We can see how the market's been moving. Finally got through that resistance back in July, and it's been kind of coming down just like the rest of the market of late. Here's your 200-day moving average. Probably may connect with that early next week. RSI coming down as well. So once again, all three indexes, we got the S&P 500, the NASDAQ, the Dow, all in a bearish mode right now, September being bearish. So we're hoping that we can find some kind of support through the end of next week, the end of September, and then we catch a bid here and start to move higher. That's what we're looking for. That's what we're hoping for. That will be helpful to our positions. When the market's telling us to stay out of bullish positions, we stay out. We use the charts to tell us and guide us when it's time to get into some trades. All right, so let's take a look at some individual stocks as we do. We look at the more popular stocks because that's what people like to hear about. We start with Apple here. And, if you've been watching these videos in the past, you know that I've drawn these patterns here. I've kept them on the charts for a long period of time. This W pattern, which is a very long-term W pattern, is typically a bullish pattern once it gets through the resistance, which Apple did back in, end of May, early June, was going up real nice, and then it hit the wall up here and started to come back down. So just like the rest of the market, Apple's had, a tough time the last 2 weeks or so, but maybe putting in some support here. We can draw another line. Use the lines to draw yourself some resistance and some support areas, maybe around low 170s here. Maybe Apple can, find some support next week. And we have the 200-day moving average down here. So everything sort of looks the same here. Stocks got hit this week. They've fallen through some of the moving averages, and we're looking for some support to come into play. Let's look at Amazon, see how that's doing. Most of these stocks, you can see basically since the end of 2022 have been in this nice uptrend. Amazon as well, falling down, has been in the channel for a while, hugging some of the moving averages here, but now it's fallen down this week. Big sell-off this week, and we've got the bottom edge of the channel here lurking below. So, what you would consider a more high probability timing pattern is you wait for the stock or index to come in contact with the bottom edge of the channel and wait for that curl up, wait for that turn up to give you an idea that, all right, it's the selling has slowed down and it's ready to make its next move higher. You don't want to really jump the gun so much because it could fall through here and head towards a 200-day moving average. So you want to wait until you see some support come in for a couple days and start to see the stock or index start to move higher. That's your higher probability setup where it's starting to move up again, where you could possibly get into some more bullish trades at that point. If it doesn't find support here, it may keep going. All right. So that is Amazon's. Let's take a look at Microsoft and see what's happening here. Microsoft as well had been in the uptrend, fell through the uptrend, got the 200-day moving average below. RSI is coming down. So you could obviously see a pattern here for most stocks. Everything's sort of been getting hit the last couple weeks or so. Microsoft, does it have some support here? Possibly. We can draw a line. And when you want to look for prior areas of support, you want to look for some congestion back here, some prices where it has tested some support before and bounced. So you got this spot right around here, and you got this congestion right around here. So probably around 315 or so might be the spot where we might find some support on Microsoft. But you want to wait until you see a confirmed bounce before you actually get into those bullish trades. You don't want to try to pick the bottoms. And once it turns higher, it's okay if you miss the very bottom. No one's going to get the very bottom, but you're going to get in on a more higher probability setup when it starts to move higher. So that's Amazon. Let's take a look at Google. Look at the big stocks here, the big popular stocks. Google is the same. It's sort of, in the uptrend, kind of coming down below the lower edge here, getting caught on the 50-day moving average. Here's your 50-day moving average right here. So Google's looking, still in this uptrends intact, had a down move this week as well, but maybe finding support right at the 50-day moving average. So let's look at Tesla. Everybody loves Tesla for the most part. A very volatile, crazy stock. I can't, I can never really get a gauge. If you watch all the videos I make about these charting sessions, I say the same thing. Tesla is a hard one to really gauge using patterns and technical indicators because it's all over the place, right? So take it as you will. I don't really have any feeling for Tesla right now. Although in our newsletters, we do have a bullish put option credit spread. When we sell put option credit spreads, we use way deep out of the money spreads, give us a lot of cushion down here. So we do have a bullish position on Tesla. We've sold put option credit spreads. That's a bullish trade. But as long as the stock moves sideways, that's good enough for us as well. So Tesla, hard one to read, but we're involved as well. Let's look at Adobe, and then we'll look at NVDA because those are two monster stocks. This is Adobe. Just been killing it since last October. It was about $275 a share. Got all the way back up close to $575 a share. That's about a $300 move right here from right here to up here. Pulling back, it's fallen below the 20-day and the 50-day moving average. We also have a bullish put option credit spread that we sold on Adobe, but our strikes are way down here. So we have a decent amount of cushion on these stocks, so they can move up and down, and our positions won't get hurt so much. We play very deep out of the money strikes. So we're hoping that Adobe can find some support, right around 500 or so. So we'll put a line in here. We'll come see what happens next week. But, if you're looking for your timing pattern, wait for it to come down and then start the bounce. That way you know that it's ready for its next leg higher. Let's look at NVIDIA. And same thing, NVIDIA, just a monster. Got close to $100 a share back in October. It rallied all the way up to 500. Massive move, just massive, massive. But it has now fallen out of the channel. Right here, at this point, you're looking at some round numbers. $400 could be the next area of support. The 200-day moving average is lurking down here below. So some of these really expensive stocks can fall pretty good during the day. So we hope to find some support on NVIDIA. Let's look at Meta, another big stock as well. All these stocks have been in the uptrend. That's, if you want to play bullish positions, you got to stick with stocks that are in an uptrend, pulling back to some support and waiting for that next leg of the uptrend to begin. You want to stick with stocks that are already going in that direction. So this is Meta. Been looking good since last October, just like a lot of these NASDAQ stocks, pulling back, just trading sideways. So this is a good thing, at least for Meta. It's hanging around the 20-day and 50-day moving average. If the rest of the market gets going next week higher, Meta is going to go as well. Let's take a look at some stocks that are downtrending, just so you can compare. So this is Verizon. The symbol is VZ, Verizon. I always talk about Verizon. I want to get long Verizon, but I just can't, because it's just been in this downtrend that just keeps going down, down, down. There's no reason to step into a bullish position when the stock chart is telling you it's not time to get in. Why would you want to get in here when the stock's moving lower? You're just going to frustrate yourself. You're going to throw good money after bad. You don't want to do that. So Verizon for me is a non-play right now because it's going down. And I don't really like to short stocks. I really don't like to take bearish positions on stocks. I wait for the turnaround and wait for a stock to start move higher. Because in the long run, over the long run, we're talking years and years, the way to make money in the stock market is to be bullish, because stocks go up over time. So, but in certain periods, you have to wait it out. So I don't have a play in Verizon because it's telling me to stay out. Some of the healthcare stocks, so we'll look at Pfizer. Same thing with Pfizer. The stock's just been going down and making new lows. It made new lows this week, okay? Getting down to the low 30s. Bristol Myers, BMY, same thing. Just been going down. There's no point of buying these things. Just because the stock is cheap or cheaper than where it's been doesn't mean it's a buy. If you're trying to pick bottoms, you're going to get burned. If you thought this was the low and you bought, you're going to get burned. If you thought this was the low and you bought, you're going to get burned because it keeps going down. Wait for that confirmed uptrend that a stock is in an uptrend if you want to get bullish on the stock. These are just, your general technical analysis rules. Go with the trend. If you want to be bearish and buy some put options, which is a bearish type of trade, then you can get into stocks that are in confirmed downtrends and try to ride it until it turns around and goes higher. So these are just very basic things. Look to see where the stock has been going. This whole period on your screen here is about 2 years back in time. You don't even have to look back that far. You can go back a year if you want. But over the last year, this stock has been going down, and I'm not playing it. I'm looking for bullish stocks in a pullback. All right, so let's take a quick look at some other stocks here. Let's see. Netflix is another biggie that we like to look at. Netflix has done well since last summer, also in an uptrend too, but now it's starting to pull back. You got the 200-day moving average. So for us, we have a position in Netflix that we got in here, bullish position. It's starting to pull back some. So we have to keep an eye on it, but we still have a lot of cushion because we play with deep out of the money strikes. Here's your 200-day moving average, getting a little bit oversold on the RSI. So we're hoping that Netflix is going to have a bounce. We'll look at Walmart. Walmart's another nice uptrending stock. Look at this great channel right here. All you have to do is visually look at the stock on the charts and see which way it's moving, and then follow it along in the channel. Walmart's been kind of hugging along both the 20-day and 50-day moving average. They're both pointing upwards as well. The 200-day moving average is pointing upwards as well. That means the stock is trending upwards. If all the moving averages are going upwards or upsloping, that means the stock has been going up as well. So Walmart is a nice strong stock to get in on the long side, the bullish side, if and when it comes back to a support area and turns higher again. So these are just your higher probability setups. Disney, just been looking weak as well. Trying to, here's that long-term $80 level. Let me get out to the monthly chart here. The COVID low was just under $80 a share. You had the other $80 support back in 2014 or so. I'm waiting to see what Disney's going to do down here at the lows. I mean, it's a great company, but right now it's weak, but maybe it'll bounce off the 80 level. That could be, a once in a lifetime 10-year buy on Disney if it bounces off the 80 level. So keep an eye on Disney. Let's see what other stocks we have here. Let's see. Verizon we looked at. Costco, still pretty strong. You can see this big congestion pattern that it made. Once it makes a congestion pattern, it blasts out in one direction or another. Obviously, you can see it blasted out to the upside from the congestion pattern, okay? You look for those things as well. McDonald's coming down now, coming off. Pepsi also coming down through an uptrend that it had been in for a very long time. Has now fallen down below it and is below all three of the moving averages. Here's your 200-day right here. So Pepsi's below. At this point, Pepsi's a little weak. I'm not doing anything with Pepsi. Here's Warren Buffett, Berkshire Hathaway Class B shares, doing real well since last October. If you want to follow along with Warren Buffett, you go on our website. I'll show you where that is. I've got a report on that using a specific option trading strategy. But Warren Buffett is doing well in this market. And I think that's about it. Clorox getting hit pretty good here. Keep an eye on Clorox if you want to get in on stocks like Clorox. What else? Coca-Cola getting a little weak here. And, we have this nice sideways channel, but now it's falling through. And, Coca-Cola looks like it could continue on for a little bit until maybe the RSI gets down to really oversold levels. So not doing anything on Coca-Cola. So really the whole gist of this lesson is just to keep an eye on the direction of the trend. If you want to get bullish, look for bullishly oriented uptrending stocks pulling back to a support area and wait for that next move higher. If the stock's downtrending, you don't want to get bullish on that type of stock. It's very tempting to try to pick bottoms, but you're going to get burned more often than not. All right, so I think that about does it for the stock charts. Let me quickly go to our website and show you what we have here on our website. Smart Option Seller, we're all about put selling and put option credit spreads that we sell. If you don't know anything about put selling, it's a great strategy to learn about how to sell options, how to get paid to potentially buy stocks of your choice at a price of your choice. That's what put selling is all about. Go to our website, click on the Put Selling Basics link right here, and you'll come to our page. You can read a little bit about our Put Selling Basics guide, and put in your name and email address in the form right here. We'll send you a follow-up email with a link to download the ebook, and you will see this form all over our website. It's the same form. You don't have to fill it out more than once. That's what we do. Our services tab right here. We have a couple newsletters. We have our coaching sessions, and the Warren Buffett report is in the shop area if you have an interest in looking at that. Okay, that's all for the lesson today. That's what I'm seeing, trying to help out the community, making these free videos. In the description below this video, read down in the description. I've got a bunch of links that may interest you. Couple books, couple easy technical analysis books. I got some websites that can help with your chart reading if you want to start learning about chart reading. And so if you found this helpful, give me a thumbs up, give me a like, leave me a comment. Don't forget to subscribe. Hit that red subscribe button in the bottom right-hand corner of the video. Send me an email. I'll always answer your emails. All right, that's all from me today. Hope everyone's doing well, and start looking at the charts. This is Lee Lowell signing off.